let me get this together real quick, guys. Get this trade breakdown of this monster trade that I took. We'll start with the bank chart real quick so I can kind of show you my thought process behind this trade. Just use another vendor real quick, and then I'll explain the actual entry time frame after I've shown you the higher time frame. I have been very absent. I needed to use a break, I guess you could say, with drawings. All right. So the first thing I noticed was CAD fundamentals. Swiss franc fundamentals more like they were doing better than the CAD overall after doing some reading. I'm not going to go into super detail about the fundamentals because I want this breakdown to be kind of decently quick, just because I got a lot of things to do today. So the first thing I did notice was a fair value gap or imbalance right here on the daily time frame, and I noticed that there was, had it not been filled at the time, there was potential for it to, or it had been filled at the time, my bad, and there was a potential for it to have a continuation, right? I also noticed that right here, if you look in terms of daily structure, that there was a very major, oh, come on, bro, don't do me like that. It's a very major daily structure break. Now, typically, if you remember the scaling video, right, every time I break structure on the daily time frame, you have a big retracement. Yeah, you have a big retracement that comes right back up to the some sort of institutional footprint in premium territory. So, like right here, for example, refer to the scaling video, I'll kind of show you a quick little example. You had a big structure break right here, and then price came right back into the daily time frame. Right back in the premium territory, and this doesn't show as rejecting off of actually really anything, but I guarantee you, if I were to put the horizontal ray right here or something like that, when it's where it wicked out, if you go down to the, actually, this is the imbalance. Actually, I did that until just now. Right here to here, there's a gap in the candle, so you can see. So that was a daily imbalance that it came to that was in premium territory. And that's confluence right there. So it was another continuation from an imbalance right there, right? The price inbound came from that imbalance that was in premium territory after we had a big structure break right here. Now, typically they do return back to the order block that's in premium territory, but imbalances are also a thing too. If there's an imbalance in the way of a order block fill, there's likely going to be the imbalance. And you kind of just watch both for both a bit more reactive to what you see versus predictive, right? You got to change your mindset sometimes to be adaptable. So naturally, with that repeating itself over and over again, it's how liquidity is engineered on the way down and then taken on the way up and then engineered, and then repeats itself, right? And it breaks structure and then returns again and et cetera, et cetera, et cetera. But I knew that there was an opportunity, right? That if I'm going premium to discount territory on this latest impulse move that broke structure, I'm looking at the time before this big candle, I'm looking at, okay, this is in discount territory. So normally I don't take those types of trades. I'm looking at maybe this order block right here, or maybe the one above it to be a mitigation, right? At the time, but I was like, wait a minute, right? I looked at the imbalance and I was like, this is actually going to reflect in the H4 as like a liquidity take and then a potential continuation for the imbalance. So I dropped down to the H4, right? Because I was just using this as a reference. I always at least look at the daily. If I have an institutional footprint on the daily, I'll use that over the H4. So my goal was to basically, and this is how that reflected, right? It was all external liquidity up top, right? I just put that. This is all external liquidity up top, right? And this is off the daily imbalance. So I knew there was a potential for a continuation to happen right here. This H4 recently took liquidity, and I just didn't see it coming all the way up here and taking all of this liquidity back up to here, but it was decently possible, right? As long as it's a lower high, right? It's possible, right? It's possible that it could come up here, but the fact that I have the daily imbalance kind of confluence, and the fact that the H4 recently took liquidity, right? So this is what that looks like on the H4, and then you go to the daily, right? You can see that I traded above this wick right here, this candle. That's kind of how it reflects there. So I did see that, got proper price action, that there would be a continuation, right? And I even went down to the H1, saw the same thing, right? This big impulse move, imbalance fill, continuation. So once I saw the H1 kind of starting to break down, that's in the H4. That's when I kind of dropped down to the 15-minute, and that's where I will use the chart. I wanted to get that done before this retracement happened. And I'll probably close this pretty soon because I'm going to get caught in this during Thanksgiving. So From right to left, I did drop down to the 15-minute, and this is going to be it's going to be an H1 order block, right? This is after H1 liquidity take to the left here, and this is how it reflects on the H1 liquidity take, and impulse move, you know, change of character, break structure, etc. And then I drew my fib at the time just to kind of have a look, and from here to here, and indeed this order block right here was in premium territory, so I used that as a kind of a catalyst for my kind of more zoned in zone. So I got down to the 15-minute, and this is on Monday. The first thing I saw was a liquidity take to the left here inside of this H1 order block right here in purple. The liquidity take to the left, and then continuation, right? Prior to that, what happened, right? Break structure broke. Price came up. This guy right here was last up candle before the drop, was responsible for the structure break. I put my crosshairs right here. Price came up and respected that. Basically hit the equilibrium of this bullish candle, dropped, broke structure again, and then price came back up in order to respect that last up candle, right? So if I drew my premium discount fib here as well, right? Every impulse move is a potential opportunity. This is going to be obviously coming up into premium territory in order to have a continuation, right? So I noticed that, and I drew in that liquidity that was taken already, just so I have a kind of like a point of reference. So at the time that I noticed the trend, it was right here. Price was starting to break down, and at the time I did see the price action that was right here, right? So I'm like, bet market execution down. But what I didn't account for, right? And this is goes to show that literally everybody, if you're a human being, then you are susceptible to mistakes, right? I did have price come up, take this lower high, and I did not think about or account for this lower high right here. It's kind of like price action right here, being taken out this external liquidity up top. So I did take that, but I didn't know that, you know, the previous history of this trend, and I know how liquidity moves and things like that. Otherwise, this would have been a sniper entry at equilibrium, as you can see. And I was like, bet if as long as it doesn't trade above this high, right, this last high where it took liquidity and had a continuation and broke structure and had a change of character, all of that, I'm fine. And I can take a 0.5% drawdown or a 1/4% drawdown. It's not a big deal. Just as I thought, we had a bearish order block close, and then we had a break of structure, which I was happy about. So we had about a 0.5% to a 1/4% drawdown, depending on what you risked or what they risked in the chat and things like that. Price did come down, and you know, we had several breaks of structure right here. Price did come down, and that was the impulse move. And I knew it was going to be the end of the impulse move when price started to come back up a little bit. Eventually, it did break structure. I saw an opportunity to potentially get in a second time. Price rejected that. And once again, if I draw premium discount fib, right, this is the impulse move I'm referring to. This is the bearish order block and or supply that was responsible for the break of structure, right? You can see that price traded below after that, following that. So that means banks are changing which liquidity that they're chasing, right? So I saw that happen and was like, bet, you know, I'm kind of being more reactive in these markets instead of more predictive, setting less limit orders and waiting on more price action because this is just better for me, increase my accuracy rate actually. Price didn't broke structure again, changed character again. This is a double structure break basically. And once again, price came back up. Make this disappear for just a moment. Price came back up and retested that, broke structure again. And then I drew this here. You can draw this for order blocks if you want. Let me show you my settings for this. It's a lot easier than drawing zones. When I'm on my entry time frame, I'll do this. It's just 0, 1, and 0.5. That's literally it. Background if you want, or otherwise you can just have have these. But I like to have a background. You can make it as dark or whatever color you want, and basically that creates top order block by an order block equilibrium automatically. And all you gotta do is just drag it from wick to wick or whatever the case may be. So I had that big impulse move, and I'm like, I haven't really seen too many opportunities aside from maybe like right here to get in, get out of here. Aside from like maybe like right here to get in again. So I did look for an opportunity once this impulse move dropped, and right now we're on this impulse move, right? After this dropped, I did notice that there could be this lower high right here, right? Let me see. Oh, here we go. I did notice that this was in premium territory up here, and I noticed that price was going to come up to potentially fill this imbalance. But then I also saw this very perfect order block that caused a break of structure right here, right? That's to me going to be like my choice. So I was like, bet if it doesn't, if it has a continuation from this, I'm going to look for it to potentially take this liquidity right here, which this is how that looked when I drew it in. Take that liquidity right there and trade up into this order block. And if it does, then that's an obvious second entry for me. That did not happen. Price then filled the imbalance, created an order block, created a character block structure, came back up, mitigate this perfectly. Right here, it's the same thing as I just showed you how to make. Mitigate that perfectly, perfect equilibrium, retest of that. And now we're kind of sitting at this last up candle before the drop right here, which obviously broke structure, and I was anticipating a potential return to this, but it did not return. It actually kept going down. So that is the trade, and that is kind of like what I gathered from it. And I didn't get a chance to get a second entry, but that's okay because this was a 1 to 10 for a 5 to 10%. And I do tend to treat holiday weeks like this where I'll just mess with like 1 or 2 trades and have a high RR and possibly scale it in because volatility tends to be too low or pretty low and during the week of a major holiday. So like my rule with like take closing this or not, like it's like 27 pips or 30 pips from TP right here on the 1 to 10, right? Didn't get a chance to get a second entry, but that's fine. My rule is that if because we had a recent break of structure right here, right, on this wick. So my rule is that if I draw this in, if I do not get a trading above this wick right here on this order block, then it's a this potential for it's definitely going to drop, right? If it doesn't trade above, right, it's returning back to the order block that's responsible for the structure break, right? If you have a continuation from here, you could get another entry. But I don't like this trade because there's no liquidity that was taken prior to this, so it didn't really have anything to trade above. I like to have major lower highs traded above doing this. So this wouldn't be a good trade for me. This would be like a D- trade for me because there's no liquidity in line. That's not to say you can't take it. If you just wait for price action and definite, like I'm not trading higher, as in like structure doesn't break right here, and you get like another baby order block close or some rejections here, and then the order block closing, and it's obvious that you're having a continuation. Then that's when you can kind of make a decision on whether you want to do a market execution. But I wouldn't take this trade or this extra entry just due to that. But yeah, that's pretty much the trade breakdown. That's what I would do if it trades above here. I'll get it closed early. If it has a continuation, I'll obviously hold it to TP. But that was the breakdown of my trade. This is kind of easily trade of the week or maybe even trade of the month, where everything went pretty smoothly aside from me wanting a second entry and not being able to get one due to some factors that could have played out not in my favor. So the risk to me wasn't there to actually just try to force this entry. I wanted to know if is price trading above, going to trade above this, take this liquidity and use this one, or is it going to have a continuation? Unfortunately, by the time I did see it, the continuation was, I did it. It was just too late. I just wasn't feeling the setup, honestly. You're not feeling the setup, don't take it, right? I expected it to possibly trade above here into this one and just basically respect the imbalance for the time being. That does happen sometimes where price will come up, respect an imbalance, come down, and then take the liquidity and then have the continuation, right? And that's pretty much what I didn't want to happen. Otherwise, I would have been taken out of that trade. So, like I said, the risk wasn't there. I was already inside of a 1 to 10. So, and on top of that, there would be more opportunities potentially to scale in. So, that's my rule. If I'm deep in profit and then trades above, then instead of losing profit for coming all the way back up to this area, like I know it's going to, I would just close right here because of 30 it's from TP on a 1 to 10. So 5 to 10% gain, and that's trade of the week right there. It's really good to trade like this if you have a low accuracy rate, right? You're not quite having a concept down, but you're pretty profitable. Try to take 3 trades a week and win on just one of those and have a high RR, maybe like 7-10%, and just let it roll all week as long as you have fundamentals and structure and things on your side. should not be a problem. So if you enjoyed this breakdown, let me know. Let me know comments on it and things like that, questions you have about the trade and stuff like that. And we'll go from there. See you guys later.